So we have been here before. Been here where? We have been here before in terms of the high property home prices. And the last time we had it is 2018, right after we have the cooling measures step in. So what created that high in 2018? So moving ahead for mortgage rates, go up, go down. So in this instance, I just want to share with you that this is what Bloomberg says. In October last year, banks' mortgage hikes near affordability tipping point. So it's hit the threshold of 4%, okay, and that's where TDSR was actually adjusted, right? Because TDSR is supposed to be a 4% stress test. And then, of course, we see another article that mentioned that homeowners worried by soaring interest rate. But analysts say strong job markets, strict lending rules will reduce impact. I do agree with the strict lending rules, but not really the strong job market, because we see how the tech industry have been actively firing, right? Okay, so that's very, very crucial. And next thing we talk about the fixed rate homes, and this was announced in January this year, about some banks says that their fixed home rates are going down, okay, from the recent high. And that's just happened in January. And shortly after, in March, medium-term interest rate in Singapore to go up in some banks. You see, it's going up and down, and effectively we see US says a 30-year mortgage rate drops a fifth week to 2 months low, and this is just April, 12th of April to be exact. And 5 days ago, what happened? We see US again, the Feds want to raise another 25 decimal point, okay, or basis point, right? So what does it mean is that right now we are using a stress testing of about 4.7% or 4.75% for some banks for borrowing already, okay? With the additional 25 basis point, what it means is that stress tests will be increased by way of TDSR to 5%. So what does this mean for you as a consumer? It means that you can borrow lesser and with the same income, and more upfront down payment may be required for the same property purchase price. So this is happening in May. So if you were to buy something in April and secure a loan right now in April, this will definitely give you better so-called, put you in a better position when it comes to borrowing. Okay? So we have been here before. Been here where? We have been here before in terms of the high property home prices. And the last time we had it is 2018. Right after we have the cooling measures step in. So what created that high in 2018? It was that replenishment of that en bloc, right? That sees property prices raised over 21% just over a short period of less than 10 quarters. Okay, but then of course we had the 5th of July cooling measures that came in that brought property prices down. And Lawrence Wong back then, the MND, has mentioned that if these cooling measures wasn't implemented, the price would have went up by a further 15%. Okay, so we've been here before. And what literally actually drive property prices upwards again in year 2019? Okay, because after that we went down and then we went up again. So over a short 1 year. Okay, so if you were to turn back the clock and if you were to look at the National Day rally, there was an announcement by PMD on the National Day rally. They talks about the draft master plan. Okay, and that's where they first introduced the major or attractive plans of the Greater Southern Waterfront, how they're going to further extend the CBD, shifting the ports as well, and also the relocation of the Paya Lebar Air Base. So draft plans like that is what literally people wait out for to effectively bring up property prices. All right. So again, when is the next draft plans coming up? We are saying the master plan review to be happening in year 2024, which is next year. So effectively, if in any way government is going to introduce any form of cooling measures between now till next year, well, the draft plan is going to be another catalyst to boost prices or activities in so-called subject area near to this transformation blueprint. Okay, so do look out for that. That's why I say the year 2024 will still be a time with volumes and also with the master plan update as well. It's going to create some form of catalyst. So supply affects new launch prices. How is it happening? So in terms of this chart, we see the number of units on the left side and of course the year at the bottom. And this is in particular to government land sales and en bloc supply. So we see how 2017 and 2018, which is the last en bloc cycle, and government land sales supply as well, has basically created the price up or down in the marketplace. So 2017, 2018 is the all-time high in land acquisition, okay, in terms of tender. And when that happens, in 2018 and 2019, which are the two following years, we see oversupply that created the buyer's market. So in the next 3 years, which is 2020 all the way to 2022, we see how COVID first take place and effectively developer actually stopped bidding for land, and a lot of so-called consumers and investors actually went online on the webinar space to learn about opportunity, right? When crisis hit, you got to go look at opportunity rather than fear. And that's where many people start getting more knowledge and awareness and invested during this period of time, which developer did not see that coming, and effectively there were a low inventory period that spread out till today. So because of that and also delay in TOP, there was so many displacement of home, but there isn't any supply back in terms of TOP that created that current rental high, so to speak. So this is a seller's market that we are seeing right now. Effectively, you talk about those that were launched back in 2018, 2019, and so on. The future completion will actually take place this year and next year. So how many of the property that were launched back then will complete or in year 2023 and 2024? We see effectively close to 30,000 supply that will be completing in these 2 years. So effectively, incoming TOP supply will catch up, and this will close up the gap between resale and new home prices. So why new homes and resale prices are right now at a huge gap? Because we are using the previous cycle resale prices against the new home prices today over the last 1 year. Because we do not have any product, more or less, we are talking about the mega development ones that TOP over the last 2 years. Alright, so we see a huge gap, and a huge gap is effectively almost 70% for new homes and resale. But with this so-called TOP that will be this product that were launched back in 2018 and 19 arriving TOP this year and next year, we will see the gap to be a lot more closer.